Hello and welcome to Trade of the Week for the week starting belatedly on Tuesday, the 20th of September. Let's look back at last week's trade before we move on to what we're looking at this week. Last week, Axel chose to go long sterling against the Japanese yen. Unfortunately, what we did see is that this market actually pulled back despite the wider bullish trend in play. And despite the fact that we have seen this pull back and it has hit the stop loss, for me, I still think that it is a good trade that he's put on. It's just perhaps the wrong timing. You can see here in terms of the time frame, the pullback seen over the course of last week. Of course, that rebound that we've seen from trend line support, giving us that push up through your first points of resistance. But notably on the top end, 168.74 remains a key resistance level to look out for. Long-term trend is certainly a bullish one, so I'm expecting to see us continue to create the higher lows. So price turning upwards from here, as long as we don't start breaking through the likes of 159.44, I still do think that this bullish trend has some way to run, and therefore keep an eye out for this one. Certainly there's been some talk around the Japanese authorities potentially intervening given the weakness that we've seen in terms of the Japanese yen. But as things stand, that's some way off. And certainly given the fact that we have got the Bank of England coming up this week, I think that attention should turn to the hawkish nature of the Bank of England moving forward. For my trade this week, I wanted to look at what is known as the Volatility Index, the VIX. This essentially is measuring the volatility on the S&P 500. Invariably, you're seeing much of the price action coming in the inverse of what we're seeing in terms of the S&P. I am expecting to see further downside in stocks. Unfortunately, this week certainly brings that to the fore with the fact that we have got the Bank of England and the FOMC, amongst others, reporting their latest monetary policy decisions. I expect that that's going to bring volatility for the markets. Essentially, I think inflation is likely to remain an issue for some time yet, despite the fact that we have got intervention in the UK pointing towards a possibility that they'll sort of drag down the energy component. There's still widespread inflation throughout other parts of the economy that needs resolving, which means that we're probably going to get higher for longer interest rates going forward. Now, what we can see here is that the bullish trend here for the VIX playing out since, say, November 2021 has to some extent been negated with the fact that we broke through this support level here at 2576. However, if you look at that, it does also look like something quite similar to this, where we've sort of got the wider move. And then within that, we've got this sort of smaller move. So you've again seen that rally, a shallower rebound. We didn't break through the prior high, and now we've come into what looks like a potentially wider retracement. So we haven't broken the 22.19. Now, over the shorter term, essentially since sort of mid-August, we have been trending upwards. And this is what I want to pin my hat on here. We've been seeing this trend of higher highs and higher lows. We've seen the pullback at the back end of last week. And so for me, I see this as an opportunity to be able to go long once again. I'm not necessarily looking for anything major here, anything groundbreaking. To the downside, we've got about two here, basically, to be able to get down to the prior lows. To the upside, you also have two to get up to the prior highs. So essentially, I'm looking for a like-for-like move, an evens trade, a one-to-one risk to reward trade to be able to get up to the prior peak as opposed to break into the prior low. So on this occasion, I'll put my stop loss at, let's say, 24.50. And then on the top end, so if we measure that and see exactly how much that is, so it's about 2.1. So the top end, I'm going to be looking for about 28.75, let's say. So 28.75 towards the top end. And that's my target, to be able to get a one-for-one risk-reward trade for a continuation of the upside move that we've been seeing for the VIX.